Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the Japanese yen. Since the situation hasn't changed much on the euro currency, I see no big reason to just abandon the Japanese yen setup that we have discussed on the current week and shift to the euro currency. So I think that we could still proceed with the analysis and trading of the Japanese yen, and when this scenario will be finished in one or other way, then we will shift to the euro currency again. But meantime, if you will take a look at the markets across the board, you will see that mostly markets stand indecision because they expect the European Central Bank meeting, and what's more significant is that could really shift the markets. It's non-farm payrolls release on Friday, because currently the concerns of the investor about not quite good data, fundamental data from the United States, increase the concerns of the investors whether Federal Reserve is too hard with the tapering of the quantitative easing program, whether it will take pause in this process or it will continue to cut the quantitative easing for the 10 billions per month and so on. So different thoughts now stand in the investors' minds. So that impact on the markets and in fact makes markets to stay tight. And the same we see on the Japanese yen market. So our major setup in the short-term perspective is the possible bounce as the weekly Brent body trade. That's the invention of the Judd Napoli. And this setup suggests retracement to the 618 resistance of the whole move to the downside. That's approximately 103.65 area. Still, on the current week market still could show another weekly bar to the downside. That will be normal. Although we said that current level where market stands right now is very good and suitable for bouncing to the upside, because that's the support, is the 50% support, that's monthly pivot support one, and what is more significant is the 1618 extension of that ABC top pattern. The length, this speed of this leg is a bit faster than this one, but not too fast. So it's in general this is acceptable. You can see market already has bounced up here once. Yesterday it has retested this area, almost retested, and bounced again. So there are two possible scenarios that I see on the Japanese yen right now. The first scenario is continuation to the upside right from this area, right from this level, or the second scenario, appearing of another reversal pattern right here on the intraday charts, hitting the 618 support is 100 even, and then possible turn to the upside. So if you'll take a look at the 4-hour time frame chart, we'll see some signs that suggest upward continuation right from this area. That is the first scenario, is the bullish stop grabber that has been formed yesterday, as you can see right here. Also, guys, pay attention how market behaves when it already has tested all major targets. So you can see that butterfly target has been hit here, 1618 daily target has been hit here. That's why market hasn't shown the new low during this deep retracement yesterday. That's very significant, because when the market has no objective below the previous lows, it should hold above it, and that also plays like the confirmation of the existing support, and that the market really could turn to the upside. Market has formed here this bullish stop grabber that suggests the minimum target of this pattern is taken out of these highs. And that will be, guys, by the way, the 100% extension of that A, B, C bottom pattern 100% creates an agreement with 101.80 area. It's first fib resistance. The 1618 extension create agreement with this confluence resistance 102.40, 102.55 area. Okay, but our target stands at 103.65. We'll see what will happen, and as we said and discussed on the current week, that currently market stands under solid influence, solid impact of the fundamental factors, fundamental data. Do not just abandon your position. Control your risk, monitor your position as market will pass from one target to another. Don't forget to tight stop, to move it at least to the break even, or even contract stops when the market will pass after some retracement and will reestablish move to the upside. Move your stop to the previous lows. That's just any position should be managed. Do not just forget about it and drop it. Always control your risk, especially in the current situation when we expect some significant releases of the significant fundamental data. Well, on the hourly time frame chart, we have another pattern. So we can see, first of all, we have this solid bullish divergence with the MACD within this bottom. And take a look, market now is forming the bullish stop grabber that also suggests the upward continuation, but the scale of this pattern is smaller. The minimum target of this pattern stands right here. But in general, it could become the triggering moment with the upward action. That's what about the first scenario. As I said, the first scenario is the possible continuation right from this area to the upside. I do not know whether market will hit this target of the butterfly in this current circumstances, and I can't exclude that market could stop here or even here, because this is really significant resistance, confluence resistance and agreement. I can't exclude the possibility that market really could stop here and will not reach this target. That's also possible. But that is not the problem in general if you manage the position. Well, if you will take the profit here, or you will get smaller profit if market will reverse right here to the downside again, well, that's okay. That's just a part of this business. Well, the second scenario that we have discussed, as I said, that's the possibility to reaching of that area during the current week. And the reason for that, take a look at the 4-hour time frame chart. That could be the butterfly sell, butterfly buy. This could be the left wing, and that could become the right wing. And if we will measure target of this butterfly to the downside, okay, let me add 1618 extension to this. So we will get approximately 111 point, while our support on the daily time frame chart stands 118. So they stands in agreement. So that's why, as I said, that is another pattern that could be formed. But as you can see, in other patterns, this pattern and the pattern on the hourly time frame chart stands in the opposite direction. So because they suggest the taking out of these highs and corresponding in these highs. And if this will happen, the butterfly will be vanished, because we need, for creating the butterfly, we need that the all swings of the butterfly should stand inside of the initial swing. If market will take out of these highs and will continue slightly higher, in this case the butterfly will be vanished. That's why currently I am watching for upward continuation still, rather than turning to the downside and hitting the 618 support. Another reason for that, as I said, is that all targets have been hit. So the target of the butterfly had been hit. That's the ultimate extension is 1618. The target on the daily time frame chart has been hit. So from that standpoint, market has no reasons to test the 618 support right now and continue move to the downside. But as I said, as we expect a lot of significant releases, these European Central Bank statement, non-farm payrolls release, anything could happen, because especially speaking about the non-farm payrolls release, the recent yesterday's ADP report has put the foundation for possible warnings of the investor concerning the non-farm payrolls release, since the ADP report was worse than the expectations and shows the less data number of employees, jobs has been created than investors expect to see. That's why investors now have a lot of concern about the tomorrow's non-farm payrolls release. And if we will get not very good data on the non-farm payrolls, that will be the second consecutive non-farm payrolls release when the data will disappoint investors, and that in turn will increase the concerns on quantitative easing, tapering, and so on. So that will be some cyclical chain events in the United States economy and on the markets. That's why our current situation overall tricky, not only from the technical point of view, but on the combination of the technical and fundamental factors, and that really could lead to significant volatility. That's why it's very difficult to promise something. But from the technical point of view, taking into consideration pure the technical picture, I probably would bet on the upward continuation right from that area rather than creating the butterfly and turning to the upside from the lower levels, at least right now. So because currently I do not see any signs that market should fail here and will continue move lower, hit the 618 first before a reversal. So let's see what will happen. But in general, the setup of the brand body trade that we have discussed and now that's developing on the weekly time frame chart hasn't been cancelled yet by the price action, and we could say that it stands at the starting point. It should start at somewhere in this area. So let's see what will happen on the Japanese yen on today and in tomorrow's trading sessions.